Hi, I'm Edna. I'm a top finance influencer on LinkedIn and on Twitter. Today I'm coming with Shiklude to give you the rundown on all you need to know about investing. Invest. That's one of the most common things you see all over social media. The truth is, investing isn't rocket science. It's not something that is reserved for the rich, for the intelligent, for people that have gone to school, or it's not something that's reserved for other people. It's for you and it's for everybody, right? In fact, you are already investing and you may not even know it. What is investing really? It's simply putting something in another thing for it to grow. That's as simple as it is. So for example, you eating good food at the age you're currently in is you investing in your health. You going to school to learn about whatever field of study you want to be in. That's you investing in your knowledge. So we all invest in different forms, and all you need to know about investing is that you need to put money or put something in another thing for it to grow into a bigger thing. That's investing. Now, investing with your money, you just need to know two things. One, risk, and two, return. Everything about investing comes down to these two things: the risk you're taking and the return that you're getting from the investment. Now we're going to get a bit technical, but don't worry, you'll get all of it. In the finance world, there's something we call risk-free investment. Now this doesn't mean that those investments are completely risk-free. It doesn't mean that you will not lose your money if you invest in those things. It just means that the risk there is really low, and you have a high likelihood of not losing your money. So really, what is risk then? Risk is, regarding finance, is simply the chance of you losing all or some of your money. That's simply what risk is. So when we say risk-free investments, we mean those investments have a low chance, a very low chance of you losing your money. It's so low that we even think it doesn't even exist. So that's why they're called risk-free investments. And what are these risk-free investments? You think of things like government bonds, treasury bills, all these things that are issued by the government to people. Now you may have heard about things like the Nigerian government issuing bonds and all of that, and you think, oh, that's so complex, I can't get it. It's really simple. Just on your smartphone or whatever, you could just Google it, like Nigerian government bonds, Nigerian treasury bills, or treasury bills generally, and then you get information on that. So what do risk-free investments really do? They simply just tell you what's the flat rate, like what is the lowest form of return that you should be expecting in the market. And then it helps you to benchmark, to think about how much risk the next thing is worth. So let me give you an example, right? Let's say Nigerian government bonds are currently giving a return of 10% a year. That means if you invest, say, 100,000 in it, you will get 10,000 naira at the end of the year. This means that the risk-free rate for Nigeria is 10%. So if another investment comes and tells you, oh, we're giving you 10% return, that means if the risk is higher there, then you are better off investing with the government bonds, because the risk in government bonds are lower. And then on the flip side, if someone is coming to tell you that in 1 year we'll give you 100% return for your investing, you will know that that form of investment is giving you 10 times what the risk-free rate is. And it's possible that the risk there is 10 times what it is by investing in government. And remember what we said risk is. It's simply the chance of you losing money. So you have 10 times the chance of losing your money if you invest in that kind of investment that's going to give you a 100% return in a year. And I mean, we don't necessarily want to lose all of our money now, do we? The common rule of thumb with investing is the higher the risk, the higher the return. And this also means that the lower the risk, the lower the return. So that means that if something is giving you high return, for example, if something is offering to double your money in 3 months, that means there is a high risk with that investment. And if something is offering to give you 10% return in a year, which is kind of like what the treasury bills in Nigeria offer, that means the risk there is on the low side. Now, this may not always be the case with every investment. There are some investments that offer you high returns, but then the risk is not as high, and there are some investments that offer you low returns and then they still have high risk. Because think of it, if all people that are looking to steal your money have to do is to tell you, oh, we'll just give you 10% every year, that's what the government gives, then anyone can simply just come up with a story and then still run away with your money. That's not all you need to look at when thinking about investments. You have to look beyond the return they are giving you. And this is where understanding the business comes into play. The first thing you need to do when looking at an investment is, what business is this person doing? So you look at the investment, and let's say they are offering you real estate, or come and buy this house, and then in a few years you triple your money. You have, let's say you start with 100,000 today, in a few years you have 300,000. Now that sounds a bit risky, but then you now have to ask yourself, how does real estate business industry, how do they work? What are the kind of returns that are normal within the real estate industry? So when you look at that, you can see, oh, maybe within the real estate industry, you see that it's normal for people to have 3 times their money in a few years. So that means that person isn't really offering you a risky investment. It's something that's normal within the industry. Another example would be if someone is offering you investments in Forex, which has become really popular these days. They say, oh, within this Forex investment, we'll give you 20% return every month. In that case, you just have to ask yourself, what is normal return within the Forex space? And to do this, you could have a Google search, like what are normal returns? Just simply Google what that is. Google is surprisingly very helpful. Or you could ask around, ask the popular finance person, not necessarily the most popular, but just look for figureheads that understand how the finance industry works. And then they tell you, oh, well, that return is quite high for the kind of investment they're offering. Then you do your research a bit and you know which one works and which one doesn't. So the key thing to do here is to understand the business and understand the way they are working. And this will help you understand the amount of risk you are taking within that business. Okay, so here's a quick checklist to help you pick investments. 1, do you understand the business? We tend to invest in what's hottest in the market now. Between January and May 2021, a lot of people were looking at investing in crypto. Everyone wanted to buy Bitcoin, wanted to buy Ethereum and all of that good stuff. But the truth is, not all investments that are hot per time should be things that you involve yourself in. So think of it like this. If you cannot understand the business, do not put your money in there. The truth is, there are so many opportunities in the world. Opportunities are like buses, right? A dime a minute. You get one almost every 30 minutes. There are so many opportunities. And if you can't find the one that you understand, the best thing for you is to not invest in it per time. So first thing you need to do, understand the business. 2, when you understand the business, it helps you understand the risk of losing your money. Let's talk about Bitcoin and cryptocurrency for a minute, right? The risk of losing your money with Bitcoin, Ethereum, and all of that is quite high, because you've seen from history where the price was $10,000 one day, and then in a few days it was down to $3,000. You could lose almost half or more than half of your money in a couple of days if you are not careful. So you need to understand what are the risks with those kind of investments. The thing with investments that can make you a lot of money is that they can also lose you a lot of money in a very short time. Like we said earlier, the higher the risk, the higher the return. And then you move to 3. Are you comfortable with the risk? Now, there are some of us that really like risk, who are willing to go for anything that will give us a lot of risk if it can give us a lot of money. But then there are others who do not really want risk. As long as you can get some return for your money, you are happy. If you are that kind of person, you probably want to go for things that are lower risk. You don't want to be looking at things like cryptocurrency or things like stocks that are very, very, very risky. 4, after you've looked at the risk and what you're comfortable with, then you need to look at how can you invest in that thing. What are the platforms that are reliable that you can invest in that? And if you are comfortable with all 4, 5, you can then go ahead and invest in such a thing. So in conclusion, what is investing all about? Just 2 things, risk and return. Is the risk worth the return that you want to invest in? If the answer is no, then you don't want to invest in such a thing. Even if the return is so high, if the risk is too high for you, you want to stay away. Thank you.